So hey guys, in today's video we want to talk about a new feature added by Zerodha. You can access this feature both on desktop and your cell phone. But there's this number out there that 99% of the investors or traders or manual investors do not beat the market. And now Zerodha allows you to see whether you're beating the market or not. So just click on your profile and go to console, and immediately you will see this chart. Zoom this chart out and click compare. Click on Nifty 50, and here you will see your portfolio's NAV in blue and Nifty 50 in purple. Now, have I beaten the market? I'm basically tied in line with Nifty 50 given the current recent market turnaround or the recent market drop. If I just don't look at the last 3 months, the difference between Nifty and my portfolio was 60% versus 89%. And that is since inception. My inception time is July 2022. And this is basically when I was a noob. I had no idea about investing, technical fundamentals, industry analysis. I didn't know any of that. So first 6 to 8 months, I basically did not know anything about market. I was dipping my toes and getting the idea or the feel of the market at the first few months, and my account value was also not that great. Now, the older way of looking at this account value was this, where you could just see the things as a line. Okay, where you saw things like a line, and here you didn't really understand whether you are paying in or your account value is going up because of inflows of cash, or here you can enable that. I think so, pay-ins and payouts. So now if you look at this period, this is where I think so I made most of my money. I think this was just cash payout that happened, but this is where I made most of my money. And here I went from about, let's say, 3.7 lakhs to almost 6 lakhs. Let's do this. Okay, 3.7 lakhs to 6 lakhs. And the amount of money I'm paying in is, okay, this is a payout, pay in 400, okay, so nothing, and pay in here was 15,000. So you couldn't really do like a mutual fund style return of your portfolio, because when you're paying in, that is increasing the value of your account, but you're not really getting it as if, what is your alpha, what is your CAGR. And the period here, I did actually made a good run in this period from 2023 to 2024, and in recent drop I was paying in, like when market started going down, I started paying in a lot, but this almost looks like my account has only gone up. So if you look at your portfolio performance with this new feature, you actually see your account value as if it was a mutual fund, and you're looking at the performance as if it was an NAV value. And as of now you can only compare it to Nifty 50, but this actually gives you like a better understanding whether you're overperforming or underperforming the index. And in the downturn, obviously I have fallen almost to the Nifty 50 levels on my portfolio, and I feel like if there's a turnaround, I'll again see a separation of alpha, a delta between my portfolio's value and the index, which I saw in this phase. You can almost see like how I was just over time, the gap widens and Nifty returns 30 or so, 20 or so percent, and my portfolio is doing 40, 45, 50%. And the learning that I take from this is that it is very important to book profits when you feel like the market is going up, because I did not book a lot of profits here. So it's basically as if I invested in index fund and I got Nifty 50 returns, which is not bad, right? I have not lost money in the market. The mistake here obviously was to not have realized some gains when my portfolio was up. But I feel like when the market does turn around again, the separation will start happening again. The index will, let's say, do 15%. My portfolio, I feel like it will do 50% from this point. So currently my account value is around 11 lakhs, and in next 6 to 8 months I feel like it will be closer to 15 to 16 lakhs. the alpha will be there. Alpha of how much will I do? I feel like 2x Nifty is to be expected. I expect to do 2x of Nifty consistently, and it might sound a bit ridiculous, but I feel like it is possible to do 2x Nifty. Like, if you're a small investor, you should be able to do 2x Nifty. I feel like I can do 2x Nifty, and I feel like when I started getting the hang of the market, I was doing 2x Nifty. When Nifty was giving, let's say, when Nifty was giving 28%, I was at 48%. So not exactly 2x, but closer to 2x is possible for smaller accounts. Okay, if you are doing like 10 crore or 15 crore or something, maybe it gets harder and harder to maintain a good return. But if you are like a small retail investor, getting 50 CAGR, at least in my opinion, should be possible. And I feel like my portfolio will go up by 50% by 6 to 8 months if the market turns around. If market does not turn around, then maybe the number might look a bit weaker. But this feature is absolutely the, we keep hearing the news about, are people beating the market, are most 99% lose money, or you're not even returning as much as the benchmark, which is the Nifty 50. Most retail traders lose money, 99% people lose money. All this, I don't understand who is doing all this. I feel like the number that 99% people lose money is because of you're sort of considering the trade volume that a trader does. So I must have bought and sold positions, let's say 50 times over 1 year period. A trader might do that 50 times, buying and selling in a week. So that it is possible that when you hear that 99% people are losing money, we are talking about traders who are doing 50 trades a week. I must have bought and sold positions 50 times in a whole year, and my portfolio seems to be doing just in, see, with the market drop down, I'm in line with Nifty, but I was easily, with my manual analysis, I was easily generating alpha, and I feel like it will continue happening. The learning for me from this is that to book some profits when the markets are up. I did not book a lot of profits, so I'm in line, I'm fallen in line with Nifty. But the idea that 99% traders lose money, I don't understand what their statistics are. Are they talking about traders or investors? Because I'm also technically a trader, but I'm more of a, like, not drawing lines on a chart and buy this, buy that based on all of that nonsense. So I feel like beating the market, because the Nifty 50 index is not that good in my opinion, and the stocks there are very bank and oil and gas stocks. The Nifty 50, it is very easy index to beat with even little bit of understanding and knowledge. I feel like most people will outperform the index. The learning for me personally is just to book some profits when the market is up, and the market will be up maybe a month from now, maybe 6 months from now, and I feel like my positions will continue to outperform Nifty again. I will be doing a readjustment, and I just want to show you my watch list for now. What stocks I buy and sell, it's a different story, but right now I have created a watch list. I think so this is my portfolio. So in my portfolio, the underperformance were Apar Industries. Bikaji Foods is also on a downward trend, but it is sort of reversing. CAMS, 30% drop from 52 week high. Dixon also had a drop. Then I have some smaller micro caps that have given me huge drawdowns. 60% down on Hariom Pipes. Very small company, but bad bet, and I lost money. See, that's the thing, right? You might make a bad bet, and a market crash might make a bad bet worse. So let's say if it was just a bad bet, I would have lost 20%, 30%. But because market is also crashing and I have made a bad bet, the stock is down 60%. But overall, I'm still beating the market, and I can just sleep well thinking that I'm not at least losing money. And given a turnaround happens, I will again outperform the market. So this is the underperformance performers were again this Newgen software also made me lose a lot of money. Then I think so there is a NetWeb stock as well that I lost a lot of money. This thing is not loading, but then again there is my watch list. This is my watch list, and based on this watch list I will be entering new positions that I feel are interesting. I'll be making a few or a couple of changes in my portfolio going forward, mostly coming from this watch list. When will it happen? I'm not exactly sure, but as of now I feel like I have to make some changes, and I also have to make changes in my mom's portfolio. So I'm going to do two videos. One is changes in my portfolio, and one is changes in my mom's portfolio. These two videos will be slightly different, fundamentally different. One portfolio will be safe, long term, 15 CAGR sort of portfolio, and one portfolio will be like, a more aggressive 50 CAGR expected return type of portfolio. So I'll be doing both of those. But as of today, I absolutely love this feature. I tried to do this manually, do this calculation manually, and it was just a mess. I created a mess, absolute mess. I tried to account for pay-ins and pay-ins, and payouts, and how much is my portfolio going up because of my pay-ins, and it is not a very easy thing to calculate, and that too over a period of time. But this feature basically does every calculation for you, and they know everything, right? Zerodha knows your every sort of demat history and buy sell history. So this is basically giving you an accurate representation of your account value. And I'm a very new investor, right? I was not in the market when the COVID crash happened, and I was not in the market when the COVID rally happened. I started investing on 1st July 2022. So I was not part of the COVID crash, and I was not the part of the COVID rally. So, and first few months definitely was a learning phase for me, first 6 to 8 months. But yeah, over when that learning phase was done, I feel like I did decently well in the market, and I feel like when the market turns around, I'll again be seeing a delta form. The market will just go like this for me. My value will go higher than the Nifty 50. I'm absolutely certain that I'll do at least 50% on my current account value in 6 to 8 months. Like this 11 lakhs will be closer to 15 to 16 lakhs by Diwali this year. So approximately October, November, I feel like I'll be at 16 or so lakhs on my portfolio. And again, I will be cutting some underperformers, and I will be taking positions in the stocks that I have added to my watch list. Many of the stocks in my watch list are recent IPOs, and there are some patterns that I've noticed in IPOs, that when IPO comes, they stay flat. You must have seen with Zomato, Policy Bazaar, Nykaa, and Paytm, and then they do like a 200 to 300% rally after like 6 months of coming out. Almost when nobody is talking about the IPO, suddenly these IPOs start rallying. And the thing is that IPOs are fundamentally good, right? For example, this TBO Tech, it looks like a good company. Sales growing at 27%, operating profit growing at 20%, P is 54, and fundamentally nothing seems to be bad about this company. It's a recent IPO, and it might just start rallying sometime. And that's something that I've seen with all IPOs that have came out. It's not necessary that you just have to like keep a track of it. It might start rallying at some point, and I would want to be part of that rally. So many of the stocks, this IGIL is also, it might be on a turnaround phase. It looks like it is on a turnaround phase. If it kind of continues this, I feel like this will do like easily 200%. I could be wrong, but that's what I'm sort of accounting for. That's again Premier Energy, recent IPO, has been falling down since it came. But again, if this stock does a turnaround, it will do a massive return, because again fundamentally it's doing very well. PREM, Premier Energies. So sales is growing at 120%. Operating profit at 511%. So it may be because of a lower base, but the operating profit growth is insane. It's crazy growth is happening. But again, stock is flat. P ratio is declining. So PE contraction is happening. So basically there is an expectation that earnings need to match its valuation, and till that time it might trade sideways. But if it starts going up, it will just go up a lot. This is what I've observed. I'm not sure it will happen to every stock, but this is what I observed happens with many IPOs. And then there are some this health tech apps as well that I have added to my watch list. Again, this is also a recent IPO. There's another health tech app, Invert Inventurous Knowledge Solutions. Again, a health tech app. New IPO, has been falling since it came out. Sales growth at 76%, operating profit growing at 33%. Again, it's an amazing stock. Health tech is very cash flow generating sort of sector, and this caters mostly to foreign audience and also Indian audience. But again, recent IPO, it's cold for now, but stocks like these will start rallying sometime, and the only thing that you can do is put them in your watch list, and when they start rallying, you can join the party. But yeah, I am absolutely in love with this feature. I have asked a lot of my friends and family members who invest, show me your screenshot of portfolio performance, and some of them have actually underperformed the market significantly. So the idea that people underperform benchmark is true. You might be part of that. You might be in the in line with Nifty part, or you might be beating the Nifty part. But now you can actually ask, right? Your smart friend who talks a lot about stocks, you can actually just ask him, show me your dashboard, and you can actually see whether they are doing well or not doing well. This is how everybody should analyze, at least to just get a base. If you're massively underperforming, you should stop investing manually and go do mutual funds. But yeah, absolutely love this feature. That is it for this video. I will be making adjustments to my portfolio, and I'll also be investing my mom's money. So I'll be now showcasing two portfolios on this channel. One will be my mom's portfolio, which is going to be safer stocks with strong 15 CAGR potential. So that will be one portfolio, and my personal portfolio, which will be more aggressive stocks with a 50 CAGR potential. Obviously, I'm using the word potential. I could overperform or underperform both of these portfolios. I hope you learned something. Again, I'm not a SEBI registered advisor. I'm not even a finance person. So that is it for this video. If you liked what I'm doing or like what I'm doing, you can follow me, or subscribe to my channel. I don't have any other handles, so maybe I'll make a Twitter or something in the future. But as of now, follow me on YouTube, and I'll be doing this portfolio update as time goes on. And I feel like I'll also be beating the market very easily, I feel like. And yeah, that is it for this video. Thank you for watching, and goodbye.